Yo guys, welcome to the new video. In this video, I will explain about the EURUSD algo liquidity areas. There are total 7 types of liquidities in the marketplace for the especially EURUSD pair. The first one is transactional liquidity, inducement liquidity, structural liquidity, and previous days liquidities. There are two types of previous days liquidities are there. Previous days external liquidity and previous day internal liquidity. And sixth one is Asian liquidity and seventh one is style liquidity. So I will explain all these liquidities in this video. So first thing first, you should understand about what is liquidity in the marketplace, right? The liquidity means when the orders are taken. For example, here the structure is going downwards. When the stop losses are taken, it means the money got taken by the market maker, and then the price is very ready to move. So that means the liquidity means it's just the manipulation of the price. Inducement means just the manipulation of the price. So it means, first thing, what is the meaning of the transactional liquidity? That meaning of the transactional liquidity means, for example, if the structure is going about the downwards like this, the liquidity graph in the direction of the market move is the transactional liquidity. For every transactional liquidity happen, there is a small retracement in the price up to at least 50% of the move. See, that's why the retracements occur. Retracements occur because of the transactional liquidity in the marketplace. Because of the after the transaction, the market needs more liquidity to continue towards the downwards, because the market move can't like this. The market can't move like this or like this. It won't be in the straight line manner. It needs liquidity to move the market. So that's why the retracements, reversals, and everything happen. If the liquidity is enough, then the market will move like this: transactional liquidity, reversal, transactional liquidity, reversal, transactional liquidity, retracement. This is how the market moves from the transactional liquidity to the transactional liquidity. If the market has enough liquidity, if the market don't have enough liquidity, what it will do is it will induce the players. If the market is moving in the uptrend like this, it will induce, and the money will be, liquidity will be provided to the market maker, and it will mitigate some order block here, and the market will move. See, this is the inducement liquidity. These are the two different types of liquidity I explained here. Transactional liquidity means continuation of the trend, that's why the retracements occur, and inducement liquidity is this fake break of the structure, means inducement liquidity. So in the next one is the structural liquidity, right? How the structural liquidity works. So let's say if the market is moving like this, market moves like this, right? And let's say this is the 15-minute structure. In the 1 minute, how the structure looks like is like this. Let me change the color. In the 1 minute, the structure looks like this. If you see here, so this is the structural liquidity, because if you use the Fibonacci, this will be in the 50%, below 50%, and it is also the liquidity, and this is the efficient price action line, EPA line. Same thing, liquidity got taken out, entry, we enter here and target this liquidity. This is the structural liquidity. Structural liquidity is the just low time frame liquidity in the leg. That's it. So, and when coming into the previous days liquidities, there are two types of liquidities in the previous days. Let's example. Let's say this is the previous day, and the price ended like this in the previous day. Okay. So fourth liquidity, previous external liquidity means the top edges of the price of the day is used as the previous day's external liquidity. So this is the external high, and this is the previous day low. These are the fourth type of liquidity. There is 80% chance of the reversals in this area. These are very good point for the reversals, because whole weight, the market makers have a lot of liquidity here. And what's the previous days internal liquidity means? Previous internal liquidity means this one, internal structure in the previous days. This liquidity, the previous day internal liquidity, and this liquidity, this small liquidity. So these are the previous test liquidities. And when coming into the Asian box, Asian liquidity, Asia is acts as the liquidity. In Euro USD, this Asian strategy is very simple and it occurs every day. See, if you understand the liquidity concept, you can understand every move in the marketplace, every move. If you can't understand the liquidity, you will be the liquidity. See, let's say this is the Asian session and this is the liquidity graph, and the market will move, target the Asian high. This move will occur, every day. Asian high taken out, Asian low taken out, Asian high. If you can just trade this, you will be profitable trader, very good profitable trader. And daily liquidities is nothing but in the daily time frame. When a liquidity got taken out, let's assume this is the daily time frame. So when the liquidity got taken out, this one is a very high profitable setup because it's the daily time frame, right? Daily time frame liquidities are very powerful. Daily time frame liquidities are very powerful. And when coming into the new types of liquidities, these are the 7 types of liquidity. So we learn this stuff in the charts. Let's go to the 15 minutes time frame first. If you see here what I taught you about the structural liquidity, if you see the structural liquidity here, the structure is moving like this, right? Higher high, lower low, lower high, lower low. So in this you can know where is the inducement of the marketplace. Here at this point lot of liquidity will be there, right? Because this is very clean structure, and this is the smart money fake order block, fake OB. And when the fake OBs in the marketplace are taken, there will be lot of liquidity that was grabbed by the market makers, and the price will ready to move, and the next target continue the trend, this liquidity. So this is the example of the inducement liquidity, second type of liquidity. So in this only I will show you the example of the transactional liquidity. If you wanna see the example of the transactional liquidity, you should identify the trend first. If you see here, the market is moving from the lower highs and lower lows. So the market is in downtrend. So every high is taken out, there will be a transaction, at least retracement up to the 50%. I told you, right? At least up to the 50% there will be a retracement. Can you see? Up to 50% the market will retrace. And again, we can buy here, sell here. There are a lot of opportunity in the marketplace if you just understand the concept of the liquidities. Again, if you see here, this is also a transactional liquidity, and it is aligning with the, this is the session breaks I use, and these are the previous days lows, plus transactional liquidity, which are very powerful. And this is previous day highs plus inducement liquidity. If two types of liquidities are aligning each other, it is very powerful. Two types of liquidities here are aligning each other: previous days highs and transactional liquidity, previous days lows and inducement liquidity. So that's why we buy here. In this video I am not talking about the entries. I leave the entries for my mentorship students. If you want to join the mentorship, you can go through this process, and I am just explaining you the context of the price, how the price will move from the liquidity standpoint to the liquidity standpoint. Hope you gain some value from the video. If you backtest this strategy, you can get lot of answers, get answer. So hope you enjoyed the video. Peace guys.